As Trius Lending has continued to grow and scale in business, we've realized that we come upon opportunities all the time. Opportunities for deals people are unloading. We're seeing investors who we're lending money to have really interesting, really great deals. They work well for them, they make money on them, they hold properties long term. And over the years, Steve, myself, Steve Schless, Jessica, all of us have sort of talked and said, maybe we should be getting into this game a little bit. So we finally decided to say, let's formalize this. Let's come out with the real estate fund and offer an opportunity for our investors, for new investors, for any investor to be able to get into the real estate game in a passive way, in sort of a hands-off way, but still have the upside of real estate. So run through the basics, I guess, of how the fund's going to work and how someone gets into this.
Well, I think you hit on a couple interesting things. The first of which is that none of this is new. We have been supporting investors doing this on an individual basis, on an individual level, myself included, for decades, and doing it to great success. It's been really awesome to be a part of their journey, and it's been fun to watch as they grow. News headlines are filled with some of the larger corporations doing very similar things on a really large scale. So what is Trius doing? Well, we're doing nothing new, but we're sticking at what we're really, really good at. Single family rental homes throughout the Mid-Atlantic and Eastern region. And in so much as we are not going to be doing any large commercial buildings, we're not going to be doing large multifamilies. Again, it's absolutely the core business of Trius. That's where we're staying, and that's what we're looking to invest in and also bring in investors to invest in as well. That is the basics of it. And then really from there, it is the simple act of finding good real estate, which we review every day, thousands each year, underwriting it, and then the addition of course, getting those units rented out so we get the added value of cash flow and rental income. And then finally, of course, you get the benefits of appreciation and depreciation. I guess what do you think is most exciting?
Yeah. Well, I think you hit the nail on the head. We're not recreating the wheel here, right? We're riding the wave. We're going to ride the wave of what other people are doing, have done, and continue to do, which is investing in real estate for the long term. This is a buy and hold strategy, which always works. I like to say to people, it's not a matter of if, it's a matter of when the properties appreciate. It's not a matter of if it's going to be successful, it's when it's going to be successful. Depending on the marketplace, it might be 1, 2, or 3 years, maybe 5, 6, or 7 years. This is a longer term fund. So that's the first thing I want to outline. This is a 5-year minimum with a potential for it to be a 7-year. That's because it needs time for the property to appreciate, for the property to stabilize, for all the cash flow to work for investors. We're going to buy a whole bunch of properties, use the cash we raise, borrow some money as well, probably at about a 50% LTV. That's what we're ballparking. That's subject to change, but that's what we think makes sense for us. That means if we're raising $20 million in this fund, which is the size of the fund, and we borrow $20 million at 50% loan to value, we're going to buy about $40 million in real estate, $40 million in rentals. That's a lot of rental properties. We'll insource, bring in the management company, we'll handle that ourselves. We'll oversee everything, analysts, accounting, finance, all the data, all the analysis. Jessica has experience owning real estate properties. Steve Bond has experience owning real estate properties. I have experience owning real estate properties. Small, medium, large, commercial, non-commercial. This is residential rentals only. So we buy a whole bunch of residential rentals, and like I said, we ride that wave. Property values go up, rents continue to go up, mortgage balances go down, there's tax depreciation to all the investors, as there is when you're an individual owner of real estate as well, and you just ride the market. Our hope is that over a 7-year period, again, maybe 5, maybe as long as 7, that we can have an annualized return in the neighborhood of 14, 15, or 16%. Not a matter of if, a matter of when.
I think some of the key basis of Trius Lending Partners, so safety, consistency, conservative underwriting, all of that's absolutely still going to be there. And when we look at how we're going to run this business, this rental fund, that's very much in play. So we are also looking at historical averages, because as Josh pointed out, it is impossible to predict the future. There could be, black swan events. But really, if you look at the fundamentals of real estate within the United States, and you pull really good data, Case-Shiller Index, US Census Bureau, the numbers show really steady returns. And that's, we've used that, and then we make it even more safe and more conservatively underwritten in how we're projecting essentially our returns for our investors. And also the type of properties we're looking at We are not looking to do big renovations. We're not looking to take on massive risk in the acquisition itself. If it requires a permit, it's really probably not a property we're going to seek out. Absolutely bringing things to market. Anybody that has done single family rentals, paint and carpet are amazing. They do wonderful things. They do add value, and renters appreciate that. But massive rehabs, it's not what we're looking to do. We're looking to stay incredibly focused exactly within how we already operate and what we're best at.